We have a very special guest today. John Lee owns a mining company, a silver mining company. I've always been curious about investing. A lot of people that are interested in investing might not necessarily know how to start. And so when I found out about John's background, I think he has a lot of really good valuable advice. So there's going to be a two-part to this series. So first part is we're going to be diving into the world of investing, and we're going to get his opinions on different topics. The second part is, because since he's a poker fan, I'm going to let him ask me questions back.
Thank you, Andy. I'm a big fan of yours. Been watching live at the bike on YouTube for the last several years, and it's great to catch up.
I appreciate it, man. I appreciate it. I know you've been in the game for a long time now.
Yes.
You know, how did this all start for you?
Well, I was born in Taiwan, and I started investing back in the dot-com business in 1995 from 1995 to year 2000. I caught this dot-com craze and got familiarized with the dot-com industry and started trading equities. Then from year 2000, I transitioned from dot-com to commodities, because the company I worked for was bought out in year 2000 by another bigger company. So I was very fortunate to sort of cash out at the time. Through the times, I've made millions and lost millions, trading stocks, trading options, trading futures, trading currencies. And in the last 10 years, I've been running a mining companies listed on the Toronto Stock Exchange. But the passion has always been to study the market and study the different economies. And that's really sort of my passion is investing. And that's what I've been doing the last 25 years.
What would be your first general advice on someone like me, or someone that can relate to me, where we're interested in investing? What would be your first initial thoughts on someone getting started?
Yes, and investing, as I said, it's really no different from, say, you're collecting a piece of art or a car and then sell it on eBay. So every time when you're buying something, you agree on the price, but you disagree on the value. So the idea then is always become, who's right, who has better information, and what is the future in store for this particular asset to go up or go down in value.
But how do you come up with an analysis and prediction on that stuff? How do you gain an edge on that? Like, I know you're studying the markets every day. Like, you just study the trends. Like, you're looking at how overall through time.
Every time you're an investor, two things I will look at. Okay, one is the fundamental, it's the story. This is a belief, right? Maybe there's some factual data points you can support your belief. And then on the other side, just as important, if not more important, Andy, to answer questions specifically on how you choose the right stock or the right place to go to park your money, is the charts. It's the charts. So charts, that is the patterns of whatever you want to buy over a certain period of time with volume. There are really four sort of quadrants I can gauge where the story is right now, what stage. The four quadrants are, if the story sounds very compelling, it's on the news, everybody knows about it, and the stock is also looking very good, that is something maybe, okay, not bad, you want to put some money in, but that would not be where I made most of my money, because the news is out there. Everybody knows about it. There's not an edge that you have.
Exactly, yeah.
Right, and then there's a second type of story where the news is not good, or there's not the news, but you just try the technicals, and it looks great. It's very heavy volume on the way up and very slow volume on the way down, and the low points are always higher than the previous low points, so that would be a very good pattern. If the fundamental stories is not good, but the technical chart looks very good, that is, Andy, actually, in fact, is when I most make a lot of my money. The worst part where we make a lot of mistake, Andy, is when the story is good, but the stock looks very weak. So that is where a lot of people make a lot of fundamental mistakes, because their school talking about the fundamentals.
Can you elaborate on that a little bit?
For sure. So like an example would be Bitcoin. This is an example. Right now, say Bitcoin is the moon. You have the Michael Saylor talking about mortgage your house and selling. But if you look at the Bitcoin chart, it's very, very, very bearish right now. It doesn't mean that the bearish chart can turn bullish again. But then this is one stock that I would avoid, because the fundamentals or the storytelling sounds very convincing. It's the money of the future distributed model, but the chart is telling you something completely different. So this is a lot of times I lose a lot of money. If I look at all the histories on the money, biggest money losses, because you believe so strongly your conviction, despite the markets, Mr. Market is telling you something completely different. Why is the story so compelling, right? What is the other side of the story? And more importantly, you got to marry that with the technical charting to make sure it's almost your guidance. Your guide is the ship that's guiding you in the right direction.
I feel like a lot of people that when they're investing, they're going blindly into it. Like they don't have that information. Like for example, you mentioned crypto, and people have different viewpoints on it, you know, based on how it's going.
The only concern I have, or the big concern I have, and the elephant in the room, the crypto is never being addressed, is crypto right now trades around $38,000. But it's not really $38,000, and in daily volume, Bitcoin's around $60 billion. There's not actually $60 billion changing hands in Bitcoins every day.
Right.
Because around 70% of the crypto's trading is based on the currency called Tether. Yeah. And it's called USDT. Recently, Tether just settled a suit with the District of New York, of which Tether has to disclose their the balance sheet in their quarterly financials. It's turned out that Tether only had 2.9% of cash backing their $50 billion worth of Tether in circulation. There's the illusion that you see the crypto Bitcoin trading $38,000, that it's not in fact.
They can't back it.
There's not $50 billion actually that are changing. They're trading with US dollars or in Canadian currency or in euros. And in my view on crypto, it changed completely if there's not the Tether element to it. I mean, the dollars
itself is great. But
right, the concept is interesting.
Right.
But you know, just the fact that you have the Tether that's playing that wild card create a lot of uncertainty.
I'm sure there's so much confusion going on right now with all that as well with the crypto market. Everybody feels like it's being manipulated, and a lot of people that believed in it are probably losing faith in it, and you know, it's so chaotic. I think we can probably say for certainty that the technology of it and the idea of it is not going to go away. You know, time will tell, but like you said, you know, the integrity of it and the mass adoption of it has to be there.
There hasn't been a real legitimate use for it. If you look at Swift code, right? Like I remember 10 years ago, try to wire money internationally, it's going to take a week, but now, you know, you wire morning and afternoon you get it. There's not really any defect in the current monetary system. And it's not like go to the bank today and tomorrow you draw $100 from an ATM, of which half of it could be counterfeit. You have a very high integrity monetary system that's relatively efficient, that's relatively transaction cost low. I mean, you wire $1 million tomorrow, you know, you charge $40. So So I mean, a lot of the purpose for the crypto now, I would say it's a form of speculation. I'll be a lot more comfortable if there not being that element of Tether that's in the picture.
What about with other forms of investing? You know, like bonds and things like that, and real estate, and you know, what are your opinions on that?
I really don't have a particular sort of inclination towards, say, tech stocks or pharmaceutical stocks or travel stocks or bonds. Is something I would avoid because it doesn't compensate for the inflation that's happened. Like if you, I mean, just before I came, I look at the cost of a first class stamp, 55 cents. You know, it was 30 back at 15 years ago. It was 5 cents back in 70.
I remember that. Every time I go to the post office, I'm like, wait, what? How much is it? Like,
people say that there are two things uncertain in life: taxes and death. And I would say there's another thing is devaluation of the dollar. That is the central theme of which you look at. But then from there, how do you take advantage of that? There's different ways of going about it. So when you talk about investing, Andy, you could go from the top down or the bottom up. So usually there's a lot of people that are very successful in both. When you say bottom up, you look at particular company, particular stock, you do all your research, you convince that there's something that the market hasn't caught on, then you buy, you bet that, make that bet, and go. You have literally, you can invest anything you want. So there's already people that bundle all the real estate, for example, in Argentina. And then they bundle that, title it up, collateralize, and they issue shares. So you can buy that if you want. You can buy all the commodities in the world, and there's the commodity exchange funds. You can buy that. One thing I would get started instead of picking one individual stock, because picking the trend is already very, very difficult. You know, if you like technology, okay, you can buy a technology, what they call the ETF, exchange traded funds. It's just basically a collection of the big companies that are in that industry.
I see.
And then, so I would say, and then you look at a chart, and you say, oh, okay, you know, where relatively is the story at, right? It typically goes like a bell curve.
I think that's the key. Is that what you're saying? Is you have to, once you put your money in it, you have to follow it. You have to do your research. You have to watch it. The market behaves in a pattern.
Yes, certainly.
And so base your decisions based on that. Over time, look at that.
There are so many variables that will change the outcome. It's like the movie, one of my favorite movies called Adjustment Bureau. That's a great movie. That's a great movie because you really don't know, right? So maybe somebody spilled a cup of coffee and all of a sudden everything changes everything. Same with investing. Same with investing. To the point, Andy, will share with you, there's some fully automated, highly successful hedge funds that are running hundreds of billions of dollars in annual return of 20% plus annualized over the last 20 years. You're not invited because it's owner owned. They don't need more money. In fact, more money is actually decreasing their return because they're less mobile, less agile with too much money. It's called Renaissance Technology. You can Google. I watched hours of tape of their founder who graduated from MIT. They collect all the data under the sun and then do super high power computing to figure out what the correlation is.
That's crazy.
Yes, and they also have a very disciplined risk control.
Okay.
So, the other thing is, Andy, is, you buy the story, you got to have your stop point. Like, at which point do you, is my theory invalidated? These disciplined funds, they have a lot of algos. So soon as, the moon didn't go up 5 degrees, instead of going 7 degrees, the whole model would change, and then they would calibrate their bets accordingly. And that's why, Andy, when you talk about approach of whether investing sectors versus stock or short-term versus long-term, I'm not an advocate of doing day trading, like on a day-to-day basis. Okay. The technology is so advanced, you're just so handicapped based on what you know. Okay. Versus somebody out there that has got so much more computing power. You're gambling
a lot more.
Well, if you're based on the chart, everybody reads the chart, right? If you're based on the news, everybody reads the news. So there's really not an edge that you have. Big edge. And I will focus on technical trends, but with some fundamental attached to it. But then you would not win the short-term game because you have these algos that are trading. So you gotta have a bit of a conviction that to swim against the tide, and you also gotta have a little bit of a technical confirmation to back that up, but it's not easy. It's not easy, and that's why I would recommend somebody to start. You cannot win unless you play. Like when I started my first poker hand in 2011, I just sit at the table, right? $1-2, right? Okay. So I didn't know like when is the first to bet, or I didn't know who to bet first, and I didn't even know that button has a lot of edge. I didn't know any of that, right? So I just put the $2 in there. That's how I started investing. I think you got to start somewhere. I got to start somewhere. And I would say you start not necessarily with an individual stock, but actually a sector, like exec trading fund, a technology fund, or a biotech fund, or travel fund, or real estate fund, and go from there. But the good thing about investing is you can call off the bets anytime you want. And then the market's going to tell you based on all the available odds, here's the money you should get back, which is the price you've printed on the screen. But if you don't use leverage, if you use 100% cash basis, you can ride through these events for sure is a short term, one time. Like COVID, nobody's flying, but unless civilization collapses and who's to matter how much money you have in your bank, then somebody's going to fly again. So I would highly discourage options and leverage. Don't put too many eggs in your basket, just like you wouldn't put all your saving, all your assets in one.
Right. Yeah, it's like spreading out your risk,
Yes. Somebody can royal flush that's game over. Right. So you want to calibrate your bets accordingly. I would say, I think the easiest, your available disposable wealth, you chop it up into 10, and then you do 10% or 5% depending on your risk tolerance. And if you're starting, I wouldn't use the money that you need, for sure you need for the next 3 months or 6 months. I'm sure poker is the same way. Yeah. Because it's going to cloud your judgment. It's a game, right? But when you have real money and emotion involved, for sure. Then that's going to distort your assessments of the situation.
That actually leads me to another point I want to ask you is the emotional side. Like how emotionless do you have to remove yourself when you're involved in the markets? Your daily day is you wake up, first thing you do is look at the charts, right?
Like I said, right, because you have grown attachment into a particular token or asset over say 3-year period. If you ride crypto from 1,000 to 30,000. So you were averaging in, right? It's because you grow the tag, you have a relationship with it. So eventually you go to 5,000, 3,000, 1,500, you lose everything and more. So the one way for me in the past to try to distance myself away from that is with a technical approach. When I'm looking at some of the charts are very interesting, I do a bit of cursory fundamental research on that, and I will get a position, and then when it goes into some of the resistance level where a lot of people used to sell, it takes a lot of sort of muscle to get through that level, then I will sell, and then I never go back to that same stock again. So that is a way for you to completely rid of the forever the issue of getting too attached.
I see.
Good way to go about it is once you make money on a stock, you exit. You don't look back because there are thousands, hundreds of thousands of opportunities. It could be a twin sister that look exactly like that. Maybe not the same sector, but the chart looks identical, of which you can just replicate it again. There's one thing I want to just show the audience is, and that is something that really make you become a very modest person. Think of a market like a boat. It's going to go wherever it's going to go. You're there for the ride. So you got all these analysts say crypto is going to go 50,000 or 150,000. Tesla is going to go to the moon. Everybody's guessing. Exactly. It's complete guesswork. And nobody really knows what the future is. You're there for the ride. I think that's a very sort of important concept. And the market is going to go where it's going to go. I follow hundreds of these experts and analysts and gurus, and some people call the timing right. Some people call the target right, but nobody called the timing and the stock right at the same time.
Right.
You know, so maybe you know 99% of things, but the 1% really matter. You don't know. It only happens when it happens. In hindsight, you just don't know. You just don't know. There's no way of knowing, and maybe it hasn't happened yet, so nobody knows. So I just want to make sure when you go to the stock market, don't go in with such a strong conviction, because remember at the end, I'll just conclude is somebody's selling you, right? If something's so good to be true, why would somebody be selling? So he's obviously have a different point of view. So that's just something I always keep that in mind to keep you honest.
I like that attitude, John, that you have on investing. You got to go with the humble attitude, and you got to just look at the data, you know, do your homework, look at the graphs, and make calculated risks and make your decisions based on that, you know. But like you said, you can't time the market. You can't predict that it's going to go where it's going to go, and so you just make your decision based on what you have, the information you do have, and just adjust according to that.
The other thing I just want to share with the audience is that the dollar, I want to get back to the philosophical a little bit so you understand the overall context, is the dollar that you hold today is an abstract concept. The actual bills is not even 10% of what the dollars in circulation is still digital. All the US dollars in the world is kept in one computer. In the Federal Reserve. It's the property of the Federal Reserve Bank. All the money, all the dollars, you know, since your birth, that you think is worth something is an abstract concept. It's completely abstract. It's only worth because the government tells you it's worth. And the bank can, at its will, create a limited amount of dollar like it's doing right now. There are times there are a lot of confidence in the dollar, and there's a lot of times there's not a whole lot of confidence in the dollar. And when you measure something in US dollars, that is changing. When you look at the chart, it's going up. You don't know whether it's because dollar is going down or is it because something really happening, whatnot. So just a lot of different variables. Keep that in mind. So just say track carefully and calibrate your number of bets and make a bigger sort of area bets, not rather than individual stocks.
Yeah, I'm sure a lot of people that are watching have this concept of what John just explained about the dollar, and that's the reason why a lot of us are interested in investing, putting our money somewhere else.
It's controlled demolition. You cannot lose too quickly because then go crazy.
But over time, you know,
over time, that's one thing guaranteed.
We're all losing, so
yes, history is guaranteed that. That's true. I'm gonna be in Taiwan. I do travel, but now I'm spending a lot of time in Taiwan. So you can find me at John Lee Silver Elephant, and that's the name of the mining company of which I'm the chairman. And then I do tweet quite a lot. It's a way to get hold of me, and I look forward to making sort of friends of different successful people of different dimensions and different areas to sort of learn from each other.
Hopefully, you know, you guys had something to gain from all this talk, and there's a lot of, you know, a wealth of information. And we'll continue next time with his questions for me regarding poker.
Thank you.
Yeah, we'll see you guys next time, and we'll have John back on again.